everybody who has logged in today. Thank you for another Monday. We seem to be doing this nearly every week now, which is fantastic. We love doing these webinars, bringing you some really useful, vital information if you're looking at investing in SDA. So very excited about today. We have a return. So I'm Debbie from NDIS Property Australia. We've got Min here, our director. He is going to be hovering in the background and answering any questions as we go. We've also got Girgis Sirgyous from Vogue Homes. Welcome, Girgis. And we've also got Brad Fuller, who is a repeat speaker on our webinars. Brad is an SDA provider with Brighter Living. Hi, Brad.
Hi, Debbie. How are you?
Good, thank you. Yeah. So look, I'm going to actually just share my screen so that I can start our slides. And okay, hopefully you can see that. So yeah, we're going to be talking today specifically about SDA development in Sydney with Vogue Homes. We'll learn about what they're doing, why they're doing it, how they're doing it, etc. Girgis has a wonderful presentation to share with us. But just firstly, I'm going to just go through a couple of points. Just a disclaimer about this presentation. We are recording this presentation, and all of the recording and the slides will be sent out to everybody who registered for the webinar. Okay, so just about NDIS Property Australia, if you are new to us as a business, we've been operating for about 3.5, 4 years now. We have a growing team. We've sold about 200 SDA dwellings, so both houses as well as apartments across Australia. On track to do another couple of hundred or so this year, hopefully. We have learnt how important it is that SDA investment as a business model, understanding the whole process. So we've made it really essential to our process to educate investors on how it all works. And this is just, one of the ways we do that, these webinars. We also have a podcast, the SDA Housing Podcast. We have been going just over 2 years. 2 episodes published weekly, currently 216 episodes up online. So we'd love you to jump on and listen to some episodes as well to learn a bit more about SDA. But anyway, that's a little about who we are. Straight into it. I'm just going to very quickly touch on some of the data that is straight off the NDIA quarterly statistics. I've focused in on 6 different regions in Sydney. You might see there I'm talking about SA4 regions. SA4 is the statistical area 4. It is the Australian Bureau of Statistics area that the NDIA use for their data. So somebody there is, could you mute yourself if you're not one of the presenters? There's some background noise happening there. Sorry, guys. So these 6 regions, Parramatta, the southwest of Sydney, Blacktown, Baulkham Hills and Hawkesbury, outer southwest, and city and inner south. This is because some of the suburbs that Vogue Homes are working in are within those SA4 regions, places like Austral, Leppington, Blacktown, Campbelltown, Liverpool, Parramatta, Granville, Surrey Hills, Kellyville, to name a few. So what you can see here, these stats are showing you the number of participants that are living in SDA and the number of participants who are not in SDA, and that's SDA funded participants. So you can see in some cases it's more participants are not in SDA than are, or in other cases it's about a third to a half, or almost the same number. So we can see a massive demand. In this particular chart too, I've listed the location factor. This is something that comes into play in the actual funding that is paid to the investor. All the locations are based on the median average price, but they might be multiplied by 0.95, or in the case of city and inner south Sydney, almost twice. So if you've got a participant who's got funding, the highest level of funding, say for a house to live in, a house with 2 bedrooms, so one other tenant, they might have funding for, say, 90,000 a year. That will be almost doubled. So you can see that the income potential for some parts of Sydney are quite massive. If not virtually all of Sydney, apart from the houses in outer southwest, are above the one, on the one or above the one multiplier. So yes, it's going to cost you more in Sydney, but you also get a better income because of that location factor. So I just wanted to break down the places and where the gaps are in these 6 areas of Sydney. This slide is showing you the enrolled places. So that includes the existing and legacy. Those are the old SDA non-compliant homes that are not classified as new build, and they don't get that new funding. They're not fit for purpose. They need to be replaced. The legacy will be defunded in the coming years, and the enrolled places will be phased out. As you can see, there's 1,800 places, so that's bedrooms, if you like, in all of the enrolled places across these 6 locations, and you can see them broken down in order of how many in each area. I've also extracted out of this just the new build, because this is what we're talking about here, and this is what people are building, and this is where the funding is being applied. So from 1806, we dropped down to just under 700 new build enrolled places in these 6 locations. So that is not a lot of places if we go back to show you the total number of participants, which is 1,915. So only just a little over a third of those participants would potentially have places in new build dwellings. So I've taken that information and worked out where the undersupply is. So we're looking at an undersupply of around 1,321. That's based on the new build places versus the number of SDA funded participants. And so you can see how many places across these different locations there are. So we got quite an unmet demand at the moment. Just briefly, what is the future demand? We have nearly 650,000 NDIS participants Australia-wide, around 60,000 in those 6 SA4 regions in Sydney, of which 1,945 participants in total. Slightly different to the figure on my slide, because this also includes those participants that are going through the enrolment process or are, as far as the NDI aware, qualify for SDA. So that's only 3.2 of all NDIS participants. Now, the average across Australia is 3.8. So already we know that the number of participants there is a little lower than it potentially may be. If we look at the estimations of the NDIA in the future, they're talking about over 1 million people being on the NDIS by June 2032. And if we extrapolate that difference out, we're looking at maybe 95,000, a bit under 95,000 NDIS participants in these 6 areas, with 2,500 plus SDA funded participants in those 6 regions. So we've got a gap, we've got a potential extra 592 participants. So that equates to around about 1,900 places unmet by the current demand, or around about 1,000, 1,100 dwellings when we work it on the current Sydney average number of places per dwelling. Because of course you might have single tenant units, you might have 5 bedroom group homes. So it averages to 1.7 places per dwelling. It also should be noted that there are currently 650 places in the pipeline for those 6 regions, but that still doesn't, if those places all do eventuate, still got a massive gap, 1,250. This is based on the latest quarterly data that came out from the NDIS a couple of weeks back. So that is where I'm going for now. I didn't actually just tell people, we've got a Q&A box down the bottom of the screen. If you do have any questions, please pop your questions in that box, the Q&A. Min will be doing his best to answer the questions as they come in during the presentation. But any more questions that he either doesn't or can't answer during the actual presentations by Girgis and Brad, we will cover at the end of the session with a Q&A. So that is us for now. And I'm going to hand it over now to Brad.
Thanks, Debbie. That data that Debbie was showing, I know I've said this before on these webinars, but it is very flawed in terms of that gap that Debbie's talking about. And also, I want to point out something really clear about the data is those legacy homes, there are literally like, I think, 1,100 of them in the Sydney area. So what it doesn't show is how many of those people need to come out and get into SDA housing in that area.
Exactly.
And of course, what we've got is Sydney's got two important factors. One is that don't quote me to the person, but there's roughly 5 million people in that area, of which, we just can't get enough houses even to service the percentage of disability that exists there. However, the house pricing in Sydney, where it's $800,000 for a block of land, even in the not regional, but the suburban areas now, that's pushing our NDIS houses up to the $1.6 to $2 million range. Now, of course, because there's this imbalance of supply and demand, and if you've watched my other webinars or speaking events, you would have heard me talk about Sydney being the one place in Australia where this imbalance of supply and demand is at an extreme level, more so than in any other state in Australia. And it should be no surprise to anybody that why do we have less houses? Well, because of the cost of producing them for an investor. However, even at $1.6 million to $2 million, we are still at its maximum rental return. We are still talking about a 10% return if you talk commercially from an investment point of view. But also, I want to also look at something that I've discovered recently with talking to SIL providers across Australia. Not every SIL provider discloses how many participants they have that need transitioning from their SIL care into SDA. And it's important everyone realizes that a SIL client, a supported independent living client, who are the supports for participants, they have a lot of clients that are not funded for SDA. They have not achieved their housing goal, nor have they started to make the application, which is a 6 to 9 month journey for participants. I've always said that's just a disgraceful timing. But that transition takes that time, but it is about the same time it takes to build a house. And we have been helping by trying to time our investors to build a house in time for participants to transition immediately into a house and not have to wait or to look around. But of course, I have discovered that a lot of people are still in home supports. They're still in houses and these legacy homes. And of course, there is a greater number of participants that need to be transitioned out into SDA for those who are eligible. So a SIL client could be someone who is never eligible for SDA, but there is a great proportion that are. And this is the other reason. If there are no houses in a certain area, no one's been making the application for participants to transition from a SIL environment into an SDA environment, of course, which is a much safer, stable, purpose-built home. And because of this, sometimes the transition hasn't even started. So Sydney has what I believe, there's a lot more participants waiting in Sydney than even that NDIS data shows. And of course, it's always 3 months in arrears anyway, as Debbie pointed out. We just got that data recently for the previous quarter. So we're always trying to monitor it. We're monitoring, building approvals to see how many houses are actually coming through. And in Sydney, a massive undersupply, which will continue for many years to come. So as I've always said in Sydney, if you can help us provide a house, we're all helping that human rights issue, especially in that Sydney arena. And I just want to touch on also, as I keep saying to this Australia, I'm like a broken record, build the right location, get that right. build a house that's very desirable and make sure it's got all the elements in it that a participant will visit and go, wow, this is the house for me. And in Sydney, we've been working down there now for about a year and a half and working with designs. And I know that there's a gentleman here, Girgis, who's head of sales at Vogue Homes. And I would like to tell the story of how we met and what they have done in terms of SDA, because it really makes sense what their design and build has done. And I've shown those designs now to many people, and they are what I would call the Hilton of SDA. But I won't go into it in depth because I've spoke about the desirability of houses in other webinars, but everyone probably knows now that 2 living areas in a house are the way to go. Participant, to have a separation of conversation, a place they can take their friends and family and declutter the house a bit by not having everybody stuck in a small single living area room. But when we were designing under this premise with Vogue, I got a phone call from Girgis one day who said to me, Brad, why are you only doing 2 living areas in a house? And because a lot of our houses were 3-bedroom, 2 living areas, or 2-bedroom with 2 living areas. And I said to him, well, because the land isn't big enough for us to do 3 living areas. He said, but wouldn't that be better? And I said, well, of course, that would give everybody their own living space, just like we do in a 2-bedroom, 2 living area house. There's a lot more quality of life experience if you could sort of have this space to yourself. And he said, well, we can do that here in Sydney. And I said, well, of course, that would be perfect. And of course, those homes end up with a lift in them. So instead of just trying to spread the house on the ground, we've gone up. And the problem has been solved by putting a lift in and creating this extra living space up top. And of course, to me, that just meant that Vogue really understood this participant first, because a lot of people just speak about it, participant first. But, we've at Brighter Living, we actually have our COO, who's an actual NDIS participant. And I think that's really the first question you should ask any SDA provider if you're going around. How many people with disability are employed in your upper management? Because participants choose their provider. And if you've got a participant that is obviously connected to the participant world, if something needs to be done in that house, then phoning a business that actually has a participant-led upper management, obviously participants are going to connect to that. And with that advice from participants, Vogue created this, what I would call nearly the perfect house. And that's why those designs have been so welcomed in the participant world, because Girgis did not compromise on anything. In fact, even from the light switches to the grab rails, he refused to make it look like a hospitalized environment. And so these houses are just beautiful. They have high-level fittings. The toilets are, yes, they're more expensive, but they have that look of a modern luxurious home, not the toilet seats with the purple backrest, which of course are half the price of that. So when he put that treatment through all these houses, what we've come up with is a house that is probably the most desirable house in Australia in terms of a participant. And our COO certainly has looked at those plans and has given the same opinion. These are the Hilton of SDA, and it just shows what you can do to make sure that this is a house where participants will walk in. If they've been and looked at other houses in Sydney, I can tell you that when they walk into this house, they are going to go, wow, this is the house for me. And of course, as an investor, that's exactly what you want. You want your house to be the most desirable in the suburb where it's being built. And coupled with Sydney's massive imbalance of supply and demand, and of course, as I've always said, participants don't have to look in their bank account to buy a house. They're simply going to choose the house that is the most desirable in the best location with the best infrastructure around it, with hospitals close by, with big shopping centres. And as long as you stick to those guidelines, your house is going to be the one that's chosen over all the others. And yes, that does come with an extra cost. But look, even if you place all the infrastructure in the house that a participant wants and you make it more desirable, what's that? 1 year's rent, an extra 100,000 to make it that way. It will pay you dividends for the next 20 years of the funding. And of course, when it comes time to maybe, re-rent it, or a participant may leave, of course, you've still got the most desirable house in the suburb, and it will be filled again quite easily. And I've said to some people earlier, you should, as an SDA provider, you should make our job easier as an investor and follow our guidelines to make the most desirable house you can. And in Sydney, I'm making an appeal to everybody. We really need houses there, and I don't think we can really get enough over the next 12 to 24 months. We won't even put a dent in the actual supply and demand. And of course, when people see these houses coming onto the ground, they will hopefully start their transition. But what we're doing from a brighter living perspective is we're trying to say to people, start the transition now. Start making your application for a housing goal, because we can help you deliver a house on time when that happens. So, Debbie, unless you've got some questions, that's my take on the Sydney market.
No, I think we'll leave the questions for at the end of the session. Girgis, are you ready to? You're muted. We can't hear you. There you are.
Can you hear me?
Yes, we can.
Very good.
So I'll let you present your slideshow and take over.
Yeah, no, thank you. Let me just work out how I can do the sharing here. Just give me a sec.
Yeah.
Very good. Can you guys see my
We
screen?
can see that. Thank you. Fabulous.
Very good. Very good. Hello, everyone. Girgis from Vogue Homes. Thanks for having me in the Property Australia, Debbie and Min. What I'll be talking about basically is the builder's perspective and our role where it comes to SDA homes. So I'll take you through a series of different items, different things to consider when we're looking at building an SDA home. So, but first and foremost, probably start off with a little bit about us and about Vogue. We are one of the major builders in New South Wales. We build about a couple of hundred homes a year. Excuse me. That puts us in probably the top 100 builders in Australia. And we're probably the only major builder, I dare say, in New South Wales that build and specializes in SDA homes. We've been in business for over 40 years. We started off as a custom home builder. We still are. We've got display home locations in 3 different locations in Sydney. We're about to go to 5 in the next 18 months. So we're growing. We've definitely doubled in more than doubled in our size in the last 24 months, and we continue to grow from strength to strength, despite what's happening in the marketplace, which is a testament to the team, to the brand, to everyone who's involved. Why build with SDA and why a Vogue Home SDA? I'll probably dwell a little bit further into why an SDA, but just at a high level, we're a one-stop shop for our investors. We basically do it from A to Z. We go through from approvals all the way to the end to giving you the keys. But the most important thing about our product, like Brad was saying earlier, is that we really get to understand, and we really spend the time to understand what it means to live in a house or an SDA house. And like Brad always uses this phrase, seeing the world through the eyes of the participant. And that really resonated with us, is that if I'm going to live in a home and I've got to see it through the eyes of the person that's going to live in that house. And that has then inspired us to take a step back and go, okay, what would that house look like? So all our homes, and I'll go a little bit in design a little bit later, it's all in consultation with our SDA participants, or some of the SDA participants that are actually going to live in that house. We've completed all the hard yards in terms of research, in terms of approvals. We've got our SDA providers, SDA assessors, all of the different stakeholders involved. Unlike other developers or builders where they'll go, okay, well, we'll just do the build and then you need to go and figure out how to get it approved. you need to go and figure out how to obtain and gain your participants and fill your home. We basically have been able to partner with fantastic partners and bring them all to our investors. So then they have a one-stop shop to deal with instead of having to deal and work out half of the things that can actually be very confusing. We specialize in SDA, and that's in what we call greenfields and home and land. So we've got certain locations. I'll finish later today with the locations couple of locations as examples, but I'm sure Min and Debbie and the team will be able to share with you these locations later. But we also work with a lot of investors around knockdown rebuilds. So we're doing quite a bit of knockdown rebuilds for SDA at the moment. We're going through approvals and through design. They're all in various stages. And as the data suggests, there's very, very strong demand for all of these areas that we work in. We basically cover a lot of New South Wales. So we go all the way from Wollongong all the way to New South Wales and then into the Hunter. We don't go past Newcastle and we don't go past Wollongong at this stage anyway, but let's see what happens in the next couple of years. In terms of the categories that we build for, we build pretty much for every category except for robust. We just don't build for robust homes at this stage, but we build for improved livability, fully accessible and high and HPS. When it comes to the things we do, we focus on two main things. First focus is our participants. We make sure that our key focus of our approach, of our design, of our inclusion is all about the participant, because if it's not going to solve the problem for the people who are going to live in the house, then we're basically going to give you a home that's never going to be filled. So it's our moral and ethical responsibility to make sure that our participants get the home that they deserve, a home or a place that they can home for the rest of their lives. Our second key focus is our investors. We also have a moral responsibility towards our investors to make sure that we give you a house that will always be filled, that has longevity, and basically our participants will want to live in your home for the long term. So with these key focuses, if you like, or these key points, what we've done is we've taken and we've gone, okay, what would that mean for our designs and what would that mean for our facades? The first question we asked, we've gone, okay, what would make a really amazing SDA home, right? It is important to understand that participants do choose their SDA providers, and so do they also choose the SDA home. So the question would be is if you've got 100 homes in one area or 10 homes, and that's never going to happen here in Sydney, but let's assume you've got 100 homes. As a participant, which home would you choose first? And so we've basically taken that question throughout our entire design in terms of floor plan, in terms of facades, to understand what that would look like and what would an amazing home look like. So the first thing is location is really important. So the first thing we look at is location. We consult with Brad and the team. We have a look at the data and we go, okay, if there isn't going to be a strong demand in that location, we're just not going to do it. That's number one. Number two, we want a house that is so amazing that participants will call home. It's got to be functional. It's got to be suitable. It's all about choice and control when it comes to NDIS. And the big thing is the finishes. We wanted to make it not look like an institution. We wanted to make it like a home. We wanted to make it look and feel like a home. So our facades, for example, as you can tell, I don't know about you, but I've seen a lot of different facades for a lot of builders interstate and even here in Sydney. And for a lot of builders, a lot of investors, it's all about just the numbers. It's not so much about the design and the facade. So we've focused a lot. So as you can tell there, the facades look really good for these, because that's the first impression. As soon as a participant walks in, the first thing they see is the facade. And if the facade doesn't look great, it looks like crap, it's not really going to give them that really amazing experience and that impression. So a key focus for us has been around how do we make our facades look really good. The second is our designs. This is one of our single story designs. I'll take you through our double as well. But what makes this design really different is that this is a 3 participant home. We've got 3 living areas highlighted in red there. We've got 3 bedrooms with their own en suites. We've got a an OOA, which is where the carers room. As you can tell there, we won't design and build any bedroom that's less than 3 by 3. You will find a lot of OOAs. The minimum requirement is about, I think it's a 2 by 2, or don't quote me exactly, but very, very small area where it just can be used. Whereas we believe that, you know, it's if you're going to do something, do it right. So this is a 3 by 3 bedroom. It's got a bathroom there for guests. So then if you've got 3 participants living there and they've got 3 families visiting, they all have their own areas where they can visit their family members. And if they want to use the bathroom, there's an external bathroom. They don't have to go and use a participant's bathroom. And that was really, really important. And that home obviously has a 4th living area, which is the alfresco. This is our double-story house. Again, 3 bedrooms with 3 living areas. You can tell there is a lift in there. There is an overnight with a bathroom. And so again, the principles are the same. Do not do the bare minimum. Always go over and beyond. Make it feel and look like a home. So then once a participant walks in, they never ever want to leave the home. In terms of some of the questions, I thought I would add some of the FAQs, some of the questions that we always get asked from our investors. I'm sure there's a whole heap of questions that a lot of you are going to ask, but I thought I would start off or I include some of the questions. This is a big one. Who can build an SDA home? Not every builder can. You've got to be a class 3 builder. SDA homes are a class 3 building. So they are not a class or a residential home. They're not a class 1A. So any builder that's building a class 1A or building an SDA home in New South Wales as a class 1A, it's actually illegal. It is not the right thing to do. And at some point, somebody somewhere is going to get caught. It's going to have to be a class 3. That is law. That's not a preference. That is not a choice. It is a class 3 building. What that means is in terms of even the approvals, not just the builder that has to be a class 3 builder, also all the relevant stakeholders that are involved, that's your town planners, your engineers, they've all have had to have experience with class 3. They are capable, they've got the right licenses and registrations to do a class 3 building. So that is really, really important. A lot of investors will come to us and go, okay, well, ABC Homes is doing it at this. How come there's a difference? And we look at it and we go, well, that's a class 1A. That's really never going to be approved. And if it does get approved, then someone somewhere is going to get penalized. Case in point, this is a summary case from Fair Trading last year where a private certifier and a builder have gotten an SDA home as class 1A. The certifier has actually got on his license revoked, and they're at the moment prosecuting the builder, and they're looking at even prosecuting the investor. So just a heads up. How long does it take to build a home? It takes us about 10 to 12 months. And that's not because that's how long it actually takes. It actually takes us a lot. We can build the home a lot faster than that, but there are a lot more people involved that will need to come out and do certain inspections as we're building the homes. So we've got to build it, call the right stakeholders to come out, whether it's an SDA assessor or the BCA, or whoever it is that's involved, or whichever engineer that we need to get involved to come out and basically do the inspection. And that takes a little bit of time. How long does an approval take? For a CDC, it takes about 6 to 8 months at the moment. And for DA, it takes, again, 6 to 8 months plus DA time. I don't know how long DA takes. Every council is different, and that's up to council. Do we do CDC and the SDA approval? The answer is yes. We basically do it from A to Z. We get the house approved through whether it's CDC or DA. We get the house approved through SDA. We get it approved up front as part of the design process. And also we get it registered with the NDIS. So basically you get a home that's ready to go for Brad and his team to basically start filling your home. How does the SDA approval process work? There's a really detailed process online that you can download from the NDIS website. But basically it's a 2-stage process. It's upfront at the design stage. They call it a provisional design certification. That's when we design the home. and then the SDA assessor will assess it, will give us a certification, and gets it registered with the NDIS Commission. And then once we hand over the keys and it's finished, there is a final certification, what they call a final as built certification, and then that gets registered basically on the NDIS, and that's ready to move on, to move in. This is a big one. Why invest in SDA when it's so expensive? This is a table again that I share with a lot of the investors that we work with. If you look at a standard property in Sydney, you're looking at about a purchase of say about 1.2 million. I've basically picked one down the Central Coast. We've got houses that we're selling there, standard houses for about the $1.2 million house. An SDA property would be about $300,000 more. However, if you look really at the potential return, you're looking at about $40,000 versus $256,000 in terms of income. So there's about 200 grand difference in terms of the difference in rent. That means you will need about 6 properties, standard properties, to be able to generate the same level of income. But what that will mean is you will need about just under 5 times in terms of deposit to achieve the same amount, or roughly the same amount of income, and you will still be achieving about 3% versus 17% in terms of rental yield. So it's a very lucrative, it's very worthwhile investment. Why invest in Sydney when it's so much more expensive than the rest of the other states? There's a whole bunch of reasons. One, stronger demand in Sydney. There's just not enough stock to sustain the current demand. And I don't think there will be ever that's going to be an issue for the foreseeable future. And not to mention that Sydney's capital gains market has always been better than the rest of the country, and I don't see that as changing for the foreseeable future again. Why does it cost so much upfront to commit? It's a lot of cost upfront. There's probably about twice as many stakeholders that we engage to get this approved. Remember, this is not a residential home. This is a Class 3 property, which is almost a commercial property. So for every SDA property that we get approved, there's a whole bunch of stakeholders, Class 3 stakeholders that we need to engage. And that's why it takes a lot longer and it's a lot more expensive, because some of these stakeholders, we don't need them in a standard resi home. However, when it comes to SDA homes, they're very much needed, hence why there's just a lot more cost. Also, because it's a Class 3, the inclusions are different. We need fire hydrants, we need emergency power, we need sprinklers, we need back-to-bays, we need QPS. There's a whole bunch of inclusions that are required that just naturally adds to the cost of building a home. Not going to bore you with what's available, but these are some of the packages that we have available throughout New South Wales, in Sydney, Southwest, Northwest, and Central Coast. Our process is fairly straightforward. Every time we put forward a house to land package, or we get a mom and dad that want to invest and want to do a knockdown rebuild, first thing is we look at the location, make sure that there's strong demand, make sure that we can comply. Once it does, then you sign your life away, we get it approved, we build it, and basically hand it over to Brad. It's really 5 steps. It's not rocket science, quite simple, but there's a whole heap of work that's involved in the background. And the beauty about it is that Vogue Homes does everything. That's about it from me. Thank you for having me, and happy to answer any questions at some point, if there are any.
Yes, thank you, Girgis. Thank you for sharing your screen. I think you're still...
No, I'm here.
There you go. Yep, there we are. Okay, we've got a few questions coming in. But before we hop to the Q&A, I'm just going to quickly screen share and just show you a couple of slides that are very relevant to the Sydney market. Let me just get this up. I want to let everyone know, since we are talking specifically about investing in Sydney, we're going to be down in Sydney on the 20th of April. If anybody is very interested and wants to learn the real nitty-gritty about investing in SDA, what it's all about. This is a full-day event where you will hear some very experienced speakers give you an education on all there is to know about investing in SDA. Min, did you want to talk a little more to this?
No, it's pretty straightforward. Just come meet the crew, I guess. Yeah.
Yeah, so we will have some guest speakers. I believe Girgis will be one of them, and I'm sure Brad maybe will be joining us as well. Just if you really want to understand what it's all about, come along to this very special day that we're going to be holding. And just to let you know, we have really broken down the process of everything it takes for us to educate people on SDA investment. And this is a snapshot. This is not necessary for investors to understand all of this, but just so that you know what goes on in the background with our processes and what we do. It's pretty damn involved, as you can see. So anyway, just wanted to touch on that. You will be getting a copy of these slides, so you'll have that information there should you wish to sign up for our seminar on the 20th of April. Anyway, it is now time for questions. So Min, can I hand over to you?
Yeah, sure. So we have a couple of questions from various people. Michael Jacob, how much land prices are you targeting in Sydney? Girgis, do you have any comments about the land pricing there?
Yeah, absolutely. It's not, we don't go out to target specifically based on land price. We work with data. So if there's strong demand in the Northwest, then we try and find a block of land that will suit what we're looking for based on the data. Same for the Southwest or Inner West or wherever you are in Sydney. So we usually work with what's needed, and then we go out and source the land from a house to land perspective. But from a KDR perspective, also depending on where you own the land. So there is not such a thing as what's the target price. Obviously, the more cost effective the block of land, the better off you are. But yeah, we usually go off the data and the demand rather than trying to get a cheap block of land somewhere but then there's no demand there, and then there's no point of investing in that block of land.
Great answer. Now remember, everyone, the 3 Ds, DDD, design, desirability, and data. Follow the 3D process and you'll be fine. Next question is from Ashok. Is the deposit 20% and the balance is paid on completion, or is there a progress payment? This is basically a progress payment where you get your finance, you pay you have your 20% deposit with the lender, and you buy the block and stage payments all the way through. So that's the process there, like a normal house and land package. Yep. Ashok has another question there. If we have an unencumbered residential block, can you build on it in the main business district of Penrith? Girgis, you okay?
Yeah, absolutely. Well, we got to look at the block. So obviously, naturally, after this session, if you can give us the address, what we'll do is we'll first and foremost, we need to check on the data. Obviously, Brighter Living and NDIS property will look into the data, make sure that there is demand in that, in wherever that address is. And if there is, then we do our bit and we look at the from a compliance perspective. Class 3, we go through all the different codes. There are 5 different codes that we go through to see upfront if we can build an SDA home there. And if we can, then we take it from there. If there isn't, we'll tell you pretty early upfront that you can't. But there's a process. It's not as easy as saying yes, definitely. So it's a 2-step process. One is data, and second is the compliance. So check the data, then we can check the compliance, but we can certainly look into it.
Awesome. A question asked by Ricken was, is the return gross or net? That is a gross income figure mentioned by Girgis earlier. The net income, if you take 25% off the gross income, it'll be net income. So costs about 25%. Yeah. Next question, Jason. The Class 3 build classification, does this apply to all of Australia, or is it New South Wales requirement only? Brad, you want to answer this question, Brad?
It's a question on everybody's lips. So there is an Australian building code which used to say for all HBS houses, it's recommended that they have fire sprinklers. And a lot of people think that a house with fire sprinklers is a Class 3 build, and that's just not correct. We do loosely talk about Class 3 through Australia, but a full Class 3 specification, as Girgis will tell you, is everything from the energy ratings to the materials to a back to base fire sprinkler system. It's not a $40,000 system. It's just, what are they, Girgis? 70,000 or something when you go full class 3.
Yeah,
what you would see in an apartment building that's 30 stories, that's the kind of class 3 product that comes with different levels of compliances. And Girgis can talk to the cost of those certifiers, and everybody involved now. It's ridiculous. They've all got to be class 3 certified, but all that means to me is add another $10,000 to your certification bill. But apparently you've got to have them, and Girgis would be better to speak on. But in Sydney, in New South Wales, as Girgis said, it's mandatory now for full class 3 to be deployed in HPS houses. And the only other state where we don't have to really look at least fire sprinklers is Queensland, because Queensland is able to dodge this Australian building code, which says, you know, you should put HPS in all HPS houses. You should put fire sprinklers, and for anyone thinking they should, let me give you 4 reasons why you should do that. Because one, it's a moral obligation. I would think if all of us here had a daughter or a son who had a disability, and we were looking at houses one Saturday, and we came down to 2 we liked, and one had fire sprinklers and the other one didn't, I wonder which one we would choose, given that we're not writing the check for that house. So, A, it makes the house more desirable for sure. It's a safer house if it's got fire sprinklers. Also, it future-proofs you, because I think that even in areas where they say no fire sprinklers, who knows that if there's one fire in one of these houses and someone gets hurt, I reckon overnight it'll be mandatory everywhere. But it is literally mandatory now, except in Queensland. And of course, the other 2 reasons are that the NDIS actually pays you to put fire sprinklers in. It's anywhere from $5,000 up to $7,000, depending on your location, per person to put fire sprinklers in. And I know I've said to many people, apart from the moral obligation, it's the right thing to do. It's safer. It makes the house more desirable. If fire sprinklers are $40,000, literally you pay them off in 5 years. And then for the next 15 years of your investment, you've made yourself literally $20,000, or three bedroom house, $15,000 per year on average. You've just made yourself $150,000 because you put them in. So I don't see any reason not to put fire sprinklers in these days anyway. But I do want to caution you, when people talk about class 3, there's only one class 3. It's like what's going on in Sydney. The rest of the country is kind of a 1B house plus fire sprinklers. I mean, you could put fire sprinklers in your own home, your residential home. It doesn't turn it into a class 3 building. It's just an addition to the house. But Girgis, you could probably talk to the costs involved in that class 3. They're enormous, aren't they?
Yeah, no, they are. And I just want to add to that. I can only speak to New South Wales because we only build in New South Wales. So I'm across sort of the rules in New South Wales. I don't know the rest of the country. But if you Google building classes, New South Wales, there is a specific document that the government publishes. And it basically says in there, a class 3 basically is a building that houses unrelated people. That's the key word there. It's unrelated. And then it goes on and it mentions examples of data care facilities, which the SDA falls under. So it clearly stipulates in there that it's a class 3. Now, in New South Wales, it is absolutely illegal. And I showed in my slides earlier the case that the Fair Trading is taking on, and they revoked the license from one of the certifiers. They're coming super hard on that. It is absolutely illegal to build a SDA home that is not a class 3. So that's just the law. Now, that comes with additional cost. You will need a fire hydrant. That's the $30,000, $20,000 to $30,000 cost there just before you even begin. You need a fire sprinkler, a back to base. You need a UPS system, which is sort of an emergency power system. You need extra insulation internally, not just in thermal, but also sound insulation. So there's a whole heap of requirements and performance solutions that you are required to build into these homes because you're a class 3, because that's how they're classified in Sydney or in New South Wales, and there's just no way around them. That's just, and it doesn't depend on which council you're in. This is a state law. A house that houses unrelated people with a level of care is a class 3. So, and that comes with a cost.
Next question is, Ricken, can property be owned in SMSF or under PTY Ltd? You have under 3 names: your personal name, your SMSF, or your PTY Ltd. That's all good there. Next question, Jessica, do you have any builds planned for the inner west of Sydney, inner south of Sydney? Girgis?
South Sydney, we do. We've got you will realize that in the west and South Sydney, there's a lot more KDRs coming. So yes, we've got a lot in the pipeline, but we don't have a lot of house of land in these areas because there's no house of land in inner west Sydney. It's pretty saturated. So they will all be knocked down rebuilt. So yes, we've got a few in the pipeline, and I'm happy to share some of the specific locations with you, Min, and you can share it with Luke. Is it Luke? No, Jessica. Jessica, beg your pardon.
Luke's now asking, are all 3 categories built as class 3? If so, do you have sprinklers in IL?
Yes. Bottom line, like I was saying, to the definition of a class 3 is it's a building that houses 3 unrelated people or any unrelated parties. So whether it's an improved livability, high physical, or robust, or whatever it is, or fully accessible, it is a class 3 because the house has 3 unrelated parties or 2 unrelated people that live there. So it is automatically classified as a class 3.
Wonderful. Ricken asking, is the capital growth similar to residential property or similar to commercial property where rents drive the property price? Does the rent go up with CPI? Debbie, you want to answer this question, Debbie?
You're muted, Debbie.
Yeah, sorry. The rent does absolutely go up with CPI every year. The SDA incomes are adjusted based on that. Is the capital growth similar to residential property or similar to commercial property? Well, this is, it's more of a commercial property than residential, but you are building in residential areas in most cases. You're probably going to find a very similar capital growth.
Hey, Debbie, I can give you a real life case of that. I was speaking
Please. Yeah.
to an investor only last week, and we were explaining it. And this is a person, I even if I tortured him, he would not buy anything outside of the Sydney market. He is fanatically invested and has been doing this for 20 years. And when I said to him, you know, the supply and demand imbalance there, his commentary was, when I told him, you know, the cost of building an NDIS was always a few $100,000 more than a normal house in Sydney. But he said the capital growth in Sydney is what has always driven him. And I said, yes, but I go, oh, but it must stop at some point. And he said, Brad, people have been saying that to me for the last 25 years, that Sydney market will slow down. And he said, the proof's in the pudding. It hasn't. He even said, a year and a half ago, he put down 4 lots of land for $450,000. He said, I put $1,000 down on them. The land hasn't even had a bulldozer in there yet to make the roads, and now they're worth $800,000. He said, so somebody could have made themselves a millionaire in Sydney by simply putting down $4,000. And he said, I'll probably sell them before we utilize them. But his commentary was around, well, if I've already been buying normal investment property, but I've been spending 1.2, 1.3 million on a normal property. But here's the interesting thing for me. It was only yielding him between $40,000 and $50,000 per annum. And I said to him, well, I can potentially get you, you know, certainly a couple of $100,000 income. And he said, Brad, if you can prove that to me, I'll buy 3. Because for the first time, he believes, and he's certainly going ahead with 1, but he believes that in an SDA property in Sydney, he believes fanatically that his property will be going up because he believes that's just what Sydney does. And he said to me, Brad, if Sydney's worth $1 million today, it's basically 2 million tomorrow. And he wouldn't be talked out of the capital growth potential in Sydney. And, if I look back historically, even when, I look at the industry and we all say, how can Sydney stop? It must stop. It's going crazy. But you know what? It hasn't. And I got to agree with him. It doesn't look like it ever will.
Are we looking at specific areas that have better capital growth in Sydney? Or is it just pretty much generally across the board?
Well, Girgis is on the ground there. What would you...
Look, Sydney in general and New South Wales hasn't disappointed. Whether you look at Central Coast, look, I'm not an economist, but I can only tell you, say, for the last 2.5 years, in the Southwest, prices have gone. I couldn't give land away for, fast enough, at 350,000 for a block of land, and I would be begging people to take it away. And now today it's worth 600,000. And that's just a block of land. Like Brad said, it hasn't even registered yet. There isn't even a road in there. And you look again, say in the Hunter, 2.5 years ago, a block of land was selling for 190 and it's worth 330,000 today. And that's before even putting a build and realizing the full potential of that block. So we don't go off to go where is the area where is going to get the maximum capital growth, because no one can see the future. But historically, it doesn't matter where you are in New South Wales or in Sydney, specifically, prices have always doubled every 10 years. And there's plenty of data available to support that. For us, it's more of, I know that property will double every 10 years. Sydney's been leading the way now for the last 20 plus years, and it will continue to. Anyway, in terms of capital growth, we're the biggest estate, so I don't see that slowing down. We just also look at the data and where the demand is. And the other thing also is, if I've got a property that I buy at $1.5 million, that's generating for me $200,000 in Sydney, I'm not going to be selling it for $1.5 million. It's going to be worth a lot more. Even if the suburbs price is 1.5 million, I'm generating 4 or 5 times the income. There's going to be a different market for that. So I suspect there is going to be a lot more growth for these properties.
Great, good answer, thank you.
Next question, we'll skip Rick. He's asked me questions already, so skipping back to them later. Jonathan Rees, do you work with many investors who want to be in an owner-occupier? The data wouldn't matter as you have the occupancy risk covered. Brad, Girgis, do you work with many owner-occs?
Sorry, you just blurred out a bit. I just missed the last part of that question. Sorry.
Do you work with many investors who want to be in owner-occupier purchases?
We are dealing with a gentleman at the moment who has a disability. He is a fully accessible person purchasing his own home. I must say, there's not as many as we thought. It's really a handful of people that we're in connection with, if that's what you mean, a participant purchasing their own home. And look, a participant, if they have capacity, they can be their own SDA provider. And I know a lot of SDA providers don't want to tell you that, but we're there to certainly help participants acquire housing for themselves in whatever way we can do that, whether it's through the SDA process or whether it's purchasing their own home. And we're dealing with 2 people right now who want to do that. But I tell you, it's a very, very, very tiny percentage. I only know of 3 out of 200 odd homes that we've been involved with.
Wonderful. Next question is anonymous. At what stage does Vogue Homes Brighter Living get engaged? Does Vogue Homes have in-house finance broker or investor need to sort out the finance first?
Okay, I can answer my part and then Brad can answer his. We engage Brighter Living really early in the piece. So if we're putting packages together or we're looking at knockdown, rebuild, whatever the project is, the very first step is we send all the information off to Brighter Living to make sure that there is demand there. If there isn't demand, because you got to remember, as a builder, we can build anywhere. So, but for us, it's not just about the build, it's about making sure that there is demand in that area, because once you build that house, we know historically over 30 to 35% of our business is repeat business. That means that we want to do the right thing by our investors and by our moms and dads. So we've got a moral and ethical responsibility towards our investors to engage Brad super early in the process, because if there isn't a demand there, then let's just not do it. Let's not worry about it. It's not just about the build. We got one in Wilton last week. Sent it to Brad straight away. He came back within 24 hours saying, sorry, can't do it. There's not enough demand out that way. So now we're looking at a different option for the investor. So we we do this religiously every single time. The first step is engage demand, understand demand, identify if there is demand before we can then go, can we build a house there or not? And so on.
And
in terms of, yep, sorry, Brad, you go. I was going to.
no, I was just going to say, and I think in terms of why we said no right now was, remember that in choosing the location of an SDA home, Sydney's still a vast community, but we still need to be near transport corridors, or at least near some of the larger hospitals and the larger shopping centres, because that is very attractive to a participant for, as a quality life experience. So some, even in Sydney, as you know, as you spread into the outer west, there are like tracks or corridors away from the main railway lines, which are not as good a location as getting closer into all that infrastructure. And of course, we want to give guidance on that, because we absolutely don't want to involve ourselves in a location where we don't have a good certainty about putting participants in the house and providing for them. But we do like to start when an investor has building approval and is fully unconditional. I won't take any money from somebody until then, because we like to get engaged, because it takes 7 to 9 months of the build for us to, we like to be given 7 to 9 months of the build time, not just to find participants, but to match their personalities, which is a really critical element where we take time to do that. So why wouldn't you give us the maximum time to get that right? And if you do give us that maximum time, there's a lot more certainty that we will have tenants available, like when the house completes, getting the enrollment process done. So we made a decision in our world never to talk about the house until, it's actually 100% it's underway. We never want to go back to a participant and say, oops, sorry, the investor didn't get finance, or the land didn't register. So we've learnt that lesson the hard way. We just don't do that, because we do, especially in Sydney, once a house pops up, because there's such a vast number of people in unsuitable housing, that as soon as something like these houses, and let me tell you, when you show the plans and the renders to people on the Vogue stuff, they are definitely choosing that. Well, keep that house for us, Brad. We have still providers saying the same thing. We've got participants to move into that straight away, and that's the other reason we still want to look at the locations.
Yep. The second part, the financial broker. We don't have an in-house financial broker. We can refer our investors to other brokers that specialize in SDA funding. So, yeah, we do. Happy to help.
Next question by Phil. For areas with strong demand, I imagine there will be a strong application from various builders as well. Do we know how these are awarded to builders, and will this be an issue in attaining the more desirable areas? I think, Joe, just this person is confused with allocation of land lots and awarded to builders.
Yeah.
You want to explain your process, please?
Yeah, absolutely. So just from the question, I'm getting out of it that there are sort of applications with developers. If that's what it is, so basically our process is we go out on sourced land anyway. The developer doesn't get a say on where we go and get the land. So the developer, every location have got their own developers. So we go to the developer and go, give us this block, or give us this 10 blocks, or give us this 30 blocks. The developer doesn't go on purpose going, okay, well, in my development, I'm going to allocate 10 SDA homes, 5 to Vogue and 5 to this builder and 3 to that other builder. That is traditionally, that's not how it works. We work with a lot of developers. None of the developers we work with across New South Wales or across in our building region do that. It's more for them just about the land, and it's up to the builder to do what we want with that block of land. However, being a major builder, being the biggest builder that built SDA homes in New South Wales or in Sydney, we actually we have a little bit of level of control. So, for example, in a specific development, we've got a development where we've got about 25 lots there. in Central Coast, and we're only rolling out about a maximum, absolute maximum of 3 houses for SDA out there. Why? 1, because we can, but 2, because we want to make sure that we're not oversupplying the area, and we're sort of spreading it to make sure that there are enough houses across the coast in every region that we work with. So we do our bit for our investors to do the right thing, and we control it that way. But it hasn't been in my experience that developers control allocation for SDA, not to date anyway, but yeah, that's how our process works.
Wonderful. I want to skip Phil's questions. I can't show too much favoritism. Get back to him in a minute. Anonymous attendee, what is the probability of achieving the rents mentioned? Is there a breakdown to the rents mentioned? Debbie, do you want to talk about the default funding of 1 to 3 and changing circumstances 1 to 2, how it all works with regards to achieving maximum rent or not, please?
Yeah, of course. So the maximum rent is going to come if you have a participant for the highest funding level, i.e. high physical support, with the maximum tenancy funding, which would be 1 to 2, i.e. to share with one other person in a 2-tenant house. Now, whilst that is achievable, it's not necessarily going to be what you'll get from the outset. A lot of participants, when they apply for SDA funding, will automatically be given funding for a 3-tenant house. This is more the norm than them getting the higher level of funding. And a 3-tenant funding is considerably lower than 2-tenant funding. What they can do if they find a house that is enrolled as a 2-tenant home, they can then apply for a change of circumstances within their NDIS plan and request to have their funding level increased to live in that home. It can be a lot of reasons why they apply for that, not the least being that the investor will get the higher funding amount if they get that in their plan, but simply there might not be any other properties in the area where they live, where they wish to live, because that's where their families are, their supports are. So they want to stay in that area, and this is the only property that's currently available. So they have no choice but to apply to live in this home. So the NDIA will look at a lot of different factors, but they will most likely look at that and say, yes, we will approve the increase in funding. And so you can then achieve those incomes if the participant has the right level of funding. Is there a breakdown to the rents? The vast majority of that funding is the SDA amount, but each participant also pays a portion that's called the MRRC, maximum rental contribution, recommended rental contribution, and that comes to just under $12,000 a year. Again, that goes up every year with CPI. That is made up of 25% of their disability support pension and their rental allowance. So you will always get that amount, but the SDA funding is the amount in their plan that has been approved by the NDIA. And this actually goes back to just one other question, which I will also just touch on, and that is from Ricken about the rent. Do you get the same rent interstate as you get in Sydney, New South Wales? Wouldn't the return be higher in that case interstate? No. The highest returns are definitely in parts of Sydney. On one of my graphs that I showed, I had the actual location factor, and for I think it was for houses in the South Sydney area, you're getting, I think it's about 1.95 is the location factor. The location factors that the NDIA have allocated are not perfect by any means, and hopefully they will look at how those location factors are applied. But generally, as a rule, you could say that the more expensive it is to develop SDA, the higher the location factor will be. And if you're getting 1.95 times, almost double, in some parts of Sydney, you're not going to get that anywhere else in Australia.
Hey, Debbie, could I add one thing to that as well?
Mm-hmm.
It's really important all the investors realise that the design and the layout of the house is a critical element to you achieving a maximum rental return, right? And this is why this second and third living area is so important. If you've ever been in a house with a single living area and you tried to put 3 high physical support people in that one living area, it is too crowded. And this is why participants are not choosing those houses. We have when we first started, I've been involved with houses that are like that 4 years ago because they were the only houses. So we're very aware that participants didn't want to be the third person. Once two high physical support people are living there, there's a lot of equipment that goes with those guys or girls. And it's sometimes someone in a wheelchair doesn't want to choose to be the third person because it's just crowded and they've got to navigate around. The same with a high physical support person who knows they're bringing a lot of equipment. And there's a lot of hoisting, moving, showering, bathing, toileting that's going on in that house. It's very active. So this second living area was certainly a solution to declutter and have some privacy and therefore some dignity. But if you've got a 3 living area house, that's really, if you understand why we do it, a 3 living area house where everyone has their kind of own space, it absolutely increases that possibility of having 3 high physical support people into that design. And that's what we're certainly seeing because Sydney has such an imbalance in that demand. We believe that when the first of these houses is hitting the ground, we believe that we will see participants utilising these houses in greater numbers than what we've seen in the past. And I think having 3 people in a house with 3 living areas, I don't think that's an unmanageable expectation given the massive undersupply that we've got coming. So that rental that everyone sees, if you're thinking of doing that in the far western areas of Melbourne, out past Werribee and all those places, then there's no way you're going to get 3 high physical support in one house out there with a small house. It's not an expectation you should even consider. And that's one of the reasons where we're hoping a lot of people will come and spend their money in Sydney to help participants there because there's no place in Australia where the housing is more needed. And as I've always said, it's a human rights issue. Everyone should have housing available. It's just if they come to Sydney and build a Vogue home, they're going to get the Hilton of SDA.
That's exactly right. Man, you're on mute, man.
Question for Debbie. If a participant is enrolled to live in an SDA property, does the participant move on to different property when they find a better choice, especially second participant? Is there any binding on the participant versus property? How often participants are redistributed by SDA providers?
This is probably more of a Brad, but I'll start and let Brad take over. If a participant is enrolled to live in an SDA, that means if they have a tenancy lease in an SDA, can they move on to a different property when they find a better choice? Absolutely. But I think that we've determined that Vogue Homes are the better choice. So if you've got a participant in a Vogue home, they're very unlikely to find anything better, in those areas. Is there anything binding on the participant? They have a regular tenancy lease. So yes, they can move on. But the point is that the property that you're buying here with Vogue Homes is not going to be outdone by any other builder. Brad.
No, that's exactly right, because it is possible for a tenant to break the lease if they can prove that the house, the environment they're moving to, is better suited to their needs. And that's why a lot of these legacy homes, of course, compared to any SDA home, let alone a Vogue home, are certainly going to be better suited to their need. 6 to 10 bedroom homes, highly institutionalized. If you presented this new, beautiful home of any kind, really, they are certainly going to want to be living in it. But this is another way, by building, when I said about desirability, by building the best home that you can spend the extra money, build the better home on the better block of land, because then you also future-proof yourself against a participant leaving. Now, I don't know if many investors realize we have had a lot of people leave our homes over the years, over 20 now, but not one of them left willingly. They all left at God's calling. And I don't know, just as a bypass, if someone does pass away, the NDIS continues to pay whatever the rent was for 60 days. And as Debbie said, the rent comes in 2 components. One is the MMRC, the maximum reasonable rent contribution we collect from participants directly, and then there's the SDA component. So obviously, it's just the SDA component that would be paid for that 60 days. But we just don't see this jumping around. And it's a really valid question, whoever asked that, because in normal rent, I hear that question all the time. But because of the environments people are living in now, and when they choose this home, they are really choosing it, hoping they'll live there for the rest of their lives. And so we just look. I know everyone thinks about it, but we have not seen this jumping around.
Great. We lead on to the next question. Very similar to this. In terms of rental agreements, are tenants normally locked in for a period, certain duration, minimum occupancy period? Right.
Are they locked in? No.
Yeah.
So when we sign, we actually sign 3 styles of agreements. One is with the participant, an NDIS style, look, multiple pages, but it looks after the rent, the money that comes to us that then we pass on to the investor. So plus a whole range of other things, even things like, you break it, you fix it. And that brings up that maintenance question everybody asks me about. Whereas, keeping the house tidy, clean, you don't have to worry about that. There are carers in there 24 hours a day, keeping it pristine, spraying, wiping, disinfecting. The same with the lawns, the mowing, the weeding. We push that to the participant and also to the SIL provider. So we also do what's called a collaboration agreement with the carer, the SIL, and we, amongst hundreds of items about, because we have to monitor the SIL as well in that house, because our mandate is to look after the home and living experience of the participant. But we also push, you break it, you fix it, in to them. And as a third layer, we sign a general tenancy agreement with the participant themselves, just like you would with any tenant in any house. It's just that in that particular lease, a participant has the ability to break that lease within some very special circumstances. But as you know, we have a head lease with the investor, and then we sublease to the participants. And in that way, we control how long they can live there. And what we're seeing is lengthy terms. Well, to be fair, we see shorter term leases to begin with, because NDIS is still so new in SDA. We know that parents who are trying, you might have had your son or daughter in your care, and now you're trying SDA, for the first time. So we see shorter term leases initially, and then we see longer term. When everyone sees it going so well, then we see the longer term leases lock in.
Thanks for that, Brad. Just jumping around here. Phil, I understand we estimated an undersupply of 1321 SDA homes. How are we placed to capture this opportunity? How many SDA houses can we build in a year, for example? Debbie?
Certainly, we cannot build enough SDA homes in a year to meet that undersupply, probably not in the next 5 years, at least. Look, it's all about where the available properties are, whether it's a greenfield block. The Girgis has explained how that process works, or whether it is someone who comes to us with an existing dwelling that they're going to do a knockdown rebuild on. I'd imagine that compared to other major capital cities, we're going to see a lot slower development in Sydney, simply because the cost and the availability of land is a very prohibitive factor. So yeah, I don't see a supply meeting demand of SDA in Sydney anytime soon, as has already been mentioned.
I tend to agree with that.
Mm-hmm.
Thanks, Debbie. Another question is, what are the average rent achieved in terms of percentage? I think if you're considering the conservative default 1 to 3 funding, you're looking at an 8 to 9% net return on purchase price. That's conservative speaking. If you get converted to the 1 to 2 funding under the change of circumstance process, you're looking at about probably a 10 to 12% net return there on your purchase price. That's the answer there. Huyn Do from Hanoi, Vietnam, all the way from Vietnam. Can investors sell their property to anyone to withdraw capital and engage in another investment deal, as Joe just mentioned about repeat business? So yeah, you can sell your property to anyone who wants to buy the NDIS house of you. Yes. You can also not have to sell it and withdraw equity out of your house if there's a valuation increase on the property as well. So that's also a very common thing to do afterwards as well. Moving on, Michael Jacob, trying to refinance my SDA home, and SDA Provider is not providing the document showing the actual approved rent to the participant to forward to lender. What to do, please? Brad, can you answer it all?
We've actually lost Brad.
Brad, okay.
So we might have to come back to that question.
Get a new SDA provider.
Yeah. Another question is, what is the property management cost? It ranges from about 12 to 15%. The average is 15% across Australia. That's the average out there.
Yeah. And is there a cost to find a tenant? Yes, absolutely.
Procurement fees is about $5,000 to $10,000 per participant procurement fee charged by the SDA provider. Should we wait until leasing the home to claim GST of the construction cost from ATO? Well, that's a GST question between you and your accountant when you do purchase an asset like this. So we find that most people investing in using a entity trust, they claim the GST straight away within the next 3 months of the quarter. So you don't have to wait to be leased, you can actually claim it straight away upon purchase. Okay. That's pretty much it. Last question is rental yields, part of the presentation. What was that again? What rental yields? Can't remember.
I think Girgis actually very briefly touched on potential yields.
I shared that with you guys, and you can send it to Michael.
Yeah, well, Michael, the slides will be sent to you. That will show you that. But yeah, in terms of rental yields, you can also contact us, and we'll give you an idea of what your yields might be in somewhere like Sydney.
Yeah.
Yeah. Okay, we still seem to have lost Brad. I'm guessing maybe he has some communication issues. So yeah, that basically wraps up the questions to our panelists. So thanks to everyone who joined us today. I think any last nuggets of wisdom, Girgis, you'd like to leave us with?
I think the biggest thing is just do your due diligence. Make sure that you talk to the right people. Obviously, we come across a whole lot of different SDA providers and marketing companies, but I have to say, NDIS, Property Australia, you guys, and Brighter Living are one of the better ones out there. Very honest, are very well informed. So it's really important for investors to make sure that you find the right partners when you're embarking on this journey, and surround yourself with the right people, and do your research properly before you go and spend $800,000, $1 million, $1.5 million. It doesn't matter what it is. Just make sure you're doing your due diligence, and best of luck.
Indeed. Thank you, Girgis.
Come to our SDA Masterclass on the 20th of April in Sydney, right?
Yes.
So we'll have 8 hours of jam-packed information from 9 speakers at the event. Build designers, builders, SDA providers, SIL providers, ourselves, Debbie and myself. We're there to unpack it all, to give you all the answers to you guys, okay? Because you cannot in any way learn information by yourself. It's just too much information. There's too much. And you don't know who to trust, where to go, what to spend, where to invest in, how the process works. We'll do all this in 1 day session. Please come along if you can. And Debbie will definitely send the invite as part of the video and the PowerPoint slides here as well.
Yeah. And just to let you know that if you're not actually in Sydney, we're also holding one of these in May in Melbourne, and there will be upcoming ones in Brisbane. Also investor seminars. I believe that wraps it up. So thank you very much. We haven't had Brad come back. I'm guessing he's got technical issues. He's disappeared. But thanks everyone for tuning in today, and thank you very much, Girgis, for your time with us.
Thank you for having me. I appreciate it.
Bye. Thank you.
Bye.
See you guys.